Welcome back to the Brendan T. Adams audio experience. I'm Brendan T. Adams, and today I'm sitting here with Austin Lewis. He is the CEO of Paid, an all-in-one e-commerce platform helping businesses seamlessly manage payments, shipping, websites, and online shopping carts. He also is a seasoned investor and board member for multiple software companies in the digital and data space, and he's a partner of Big Brand Ventures. Austin, welcome to the show, man.
Thanks a lot, Brandon.
Hey, I told you a year ago, I think a year ago, maybe 7 months ago, we're going to work on your brand. We're going to start doing interviews and content because you're one of the most sophisticated entrepreneur investors out there that nobody knows about until you met Brendan T. Adams. And now we're going to change that. But I want to jump in today. We're going to talk about different things around investing, how you look at investments, what we look at Big Brand Ventures. I first want to go into Paid. Can you talk about what is Paid, the background of Paid.com?
Sure. Thanks, Brandon. So the idea behind Paid is that small businesses really struggle to tie all of their data points and information together. And there really is no sort of SAP or Oracle for small businesses, right? So small business owners are kind of forced to go out and try to pick up all the pieces to build their operating system, if you will, that can be as efficient and productive and as automated as possible.
So it's like an all-in-one business and a kind of like for business owners to have all the different things they need for software.
Yeah, that's right. So it's everything from the beginning to the end, which starts with the website and how you attract customers all the way through the operational aspects and then the reporting, accounting, and analytics component.
So Paid, you guys have, I think, over 100,000 people on the platform.
We've signed up, tens of thousands of businesses, both in Canada and in the US. Yeah.
Okay. So how does this tie in with ShipTime? Because you're also involved with ShipTime as well.
Yes. So Paid is more of the, operating front end, where ShipTime is really the logistics component that fits in on the back end of the platform that helps people save time and money and logistics.
Because I know you've helped us with various products for saving money on the shipping side of things. So anybody, just give an example, somebody for what they're going to ship.
Yeah. So anything from just local deliveries, whether you want to use Uber through, fulfillment type deliveries or national or regional carriers where everybody knows who they are, whether it's UPS or FedEx or, USPS, DHL. We've got a whole other list of carriers that we can provide. We do that all tied into one invoice, one statement. So we're kind of like a prime broker, if you will, for logistics, where you have one relationship with us and we can deliver, 50 plus carriers to you all through one invoice and relationship, and tie that into your other computer systems as well, so that there's no sort of manual entry of any of that data into your reporting systems.
So these companies, you started as an investor. So
that's right.
You got involved first as an investor, and that's primarily your background. You started in Wall Street in your 20s?
Yes.
What were you just trading?
Mostly, yeah. But I also was a research analyst writing research reports for technology companies that were mostly in California, but all over the world, and then selling those research reports to institutional investors, that hedge funds, et cetera. Yeah.
What's your thoughts on day traders?
Wait. It's a great question. I love it. And I actually love it. I mean, I've certainly day traded before, and I think it's a tempting thing for lots of people. But I really was able to go to New York very frequently in my career. And then I ended up, spending about 17 years in New York City. And there's only been about 2 or 3 people that I've met that I think are able to do that for a living.
Yeah.
And the real, I would make numerous trips up. I would go sell research to, hedge fund managers that had day trading operations. And every 3 to 6 months, I would go up and there's an entirely new crowd of people there.
Yeah.
Like, well, what happened to so-and-so? Well, you know what happened to them. Right?
Yeah.
So it takes a tremendous amount of discipline to be a day trader.
And not letting your emotions get to it.
Yeah.
And getting greedy.
Yeah. And it's just not, it's not something that even, AI models can do. They've determined, right? There's a whole bunch of black box trading scenarios, which, from what I've seen, don't necessarily do any better than humans, but there's definitely that emotional component that takes over and generally causes you to make the wrong decision at the wrong time.
The reason I asked this, and this is funny, because I was at a shark retreat with him in Kansas City, and a guy said he was a day trader, and you're like, this guy does not want to talk to me. And the conversation you had with him, by the end of the conversation, I'm laughing my ass off, because you basically said day traders, most of them will never work because they don't really know. Nobody really knows what's going to happen.
Yeah, that's right. I mean, it's just look. I mean, there's there's lots of information out there. I think the difference now versus 20 years ago, and there was information is valuable, obviously, but it was kind of tailored to certain types of people who had the means to pay a lot of money to receive that information.
Yeah.
And not suggesting it's inside information, just suggesting that there are a lot of sources of data, and most of them, you need to pay a fair amount of money to get
that data.
Good and accurate real-time information. And, over time that has started to disseminate out and be more democratized, but it's still, everything is mostly out in the open for most people. And, it's really hard to get some sort of edge there that's going to be able to consistently make you money in a scalable way. So anybody can get lucky anytime, right?
Yeah.
But to be able to
consistently
do that is a challenge.
So you've been very successful with your own fund. So can you tell the story with Lewis Fund, correct? Yeah. When you started, you started with, I think, $750,000 your own money. Talk about the journey of what that was, what you did to grow it to where it was.
Yeah. So we started with about $750,000 back in 2003.
Yep.
It was friends and family and mostly my own capital. We were able to scale a track record through the first 3 years of about 180% net after fees, which the hedge fund world is, fees are hefty, 2 and 20 type model. And so over time we were able to get up to about 300 million of assets under management with both onshore and offshore accounts. So we started to attract some international investors that didn't want to have assets custodied, in the U.S. And so
you raised, just for somebody that is not familiar with the typical fund, you took your own money, but then you went out and raised money. And the message is, hey, we're taking this money and we're going to invest in different assets to grow the portfolio.
Yeah, so we had a strategy of investing in smaller cap companies that were public. We were able to put about 25% of the portfolio into privates or private placements in public companies, which were more illiquid.
Yeah.
But yeah, I think the strategy really was to determine where the largest discrepancy between where something was trading and what it's worth, was, and that tends to happen in smaller companies that are followed by less people than the larger companies like Microsoft and Google, et cetera.
What kind of message, just curious, when you're going out and people are, hey, I'm looking to put money with your fund, what is that conversation like? Like, hey, here's what we're looking to do. Here's what the potential upside. But are you saying like you could lose all your money?
Yeah, I mean, it can happen. And so essentially most of the investors that we were talking to were accredited. They needed to be accredited in order to be investors in our fund. And most of them were institutional money managers, registered investment advisors, folks that were looking to allocate a certain amount of the assets they managed into, small cap, type allocation. And within that small cap area, we had a pretty good track record of outperforming the market. And so we would have folks that would have discussions with us about, what the strategy was, what we were looking for, what worked for us, and how we were able to kind of outperform in the small cap area.
And in this model, it's okay. People are not only getting return on their money, but then as a fund, the typical, what percent stays of the fund? There's a 2% management fee. Is that correct?
Yeah, and 20% of the
20% of the upside
net profit. Yeah.
Okay, so if there's 100 million in the fund and you get an exit and it becomes 200 million, so you guys are getting 20% of the upside. Is that correct? How that would work? Okay. So switching gears, because we get pitched all the time. You get pitched a lot. We get pitched a lot, Kevin, with Big Brand Ventures. What is the biggest mistake entrepreneurs make when they're pitching to an investor for getting capital?
From my perspective, I think it's just not knowing their business, not knowing the economics of the business. And, if you don't know that cold, you're bound to make a mistake, down the road.
Define that. So don't know the economics. Like give us more detail, like so somebody knows when pitching.
Yeah, I think it really just comes down to, what's the moat that your business has, right? I mean, what's the competitive landscape?
Yep.
What's going to prevent somebody from coming in and emulating essentially what you're doing is one component. But the other part is, understanding how to build a forecast.
Yeah.
You can make, numbers on paper look like anything you want, right?
Yeah.
And so
but what's real numbers?
What's the actual result going to be? And so from an investor perspective, most good investors are essentially automatically handicapping everything you say, whether you know it or not.
Yeah.
Right? So at the end of the day, it's just this large probability game of what's the probability that anything happens. And so the more that you can understand and, by the owner of the business or the company, you can have a great entrepreneur with a bad business model.
Yeah.
You could have a not so good entrepreneur with a great business model. So it just, a lot of the stars have to align there in order to get the right combination to be successful.
Well, how do you approach, because I know it's one thing when people are raising money at a certain valuation and what the entrepreneur founder's mind is of a valuation versus investor's mind. What's your typical approach when you're looking, if somebody's looking to get money from you at a certain valuation, how do you approach that? How do you analyze it and come up with what you think is the real number for your own investment?
Yeah. So great question. I think the safest way and the most trusted way is to look at, the discounted future cash flows of a business. And so a business is worth, what somebody's willing to pay for it. And those multiples can be all over the place, but, within a reasonable range of multiples on cash flow, you can come up with an estimated value of the business over time. And so there's, just like, buying a home or anything else, you can look at other comparable homes, other comparable businesses to try to understand, what fits into that category. So, but again, having something that's unique or different and being able to prove that out, not through discussion, but through economics is also, a big part of proving that you're capable of, backing up what you're saying versus just saying it.
It's not just saying it. It's not just showing the financials, but then it's actually showing the progress and track record of what you're doing, the pathway towards where you're going. And even being more conservative. I mean, projections, I think through this, done projections so many times. You can do them and they're almost never right, but at least you have a pathway understanding to where you're going with the business.
Yeah, no, that's right. I mean, I've probably seen at least 100,000, pitch decks, maybe more.
Yeah.
None of them are right. It's really just a matter of how far off are they, right? And so that's really what we're kind of looking for, because we can adjust any forecast to what we really think is going to happen and then rerun the numbers and, leverage that, insight and experience into having a much better understanding of what that business is worth.
What has stood out to you the most over the years from a pitch deck or pitch that made you intrigued to invest? Because you've seen so many.
Yeah. I mean, really it's just, making sure that, the business owner or the entrepreneur understands their business. I think a lot of people come up with ideas, and ideas are awesome and great, but they're still just ideas, and being able to execute against those ideas, having relationships within the industry, being able to, see through from idea to, financial reporting that you're able to, achieve certain milestones is helpful. I don't think it's that much different than what you guys are looking for on return on ad spend, right? You're testing to see what really happens with the outcome, and based on that, then you're willing to get, more or less involved depending on how that goes.
Data. The whole thing is we test before we invest, whether it's time, money, and energy. If you see a direct return, you keep putting more time and energy, and before you know it, that's where you see the growth.
Yeah.
So for you, over your career, what's been a couple of the best investments you've made?
Most of them kind of started in, biotech or tech. And obviously there's a risk adjusted, concept here, but businesses that can patent themselves in various different ways have pricing power. And, essentially if they can scale that business with pricing power, with not a tremendous amount of money that needs to go back into the business,
Yeah.
then that's a great business. And so, one of the best quotes I've ever heard was from Warren Buffett, who basically said, I want to own a business an idiot can run because one day one will.
Yeah.
And so that really just goes back to the point of, is the business model stronger than the, people that are going to screw that business up or not? And so having the right model and the right people is the winning combination there.
This leads to my next question. Where do you see, you see Elon Musk talk about how he's now got these robots coming out. We have AI, ChatGPT. Everything is becoming like increasingly exponential. Where do you see investing will be different in the next 3 to 5 years? Like how an investor looks at allocating money, or how even the process of getting more return on their money. What changes do you see from your perspective?
Yeah. So another good question. I think investing is not really going to change.
Yeah.
I think, in certain, eras where you go back to the .com era and you go back to the Nifty 50, which kind of preceded that in the 70s, you get these scenarios where people, feel like investing is the easiest thing to do. Like I don't really even have to think about it. I just do it. Those things tend to precede, tough times in the market where people are less focused on analyzing and decision making, and they're just kind of fear of missing out type environments. But I really think that whether it's things that we don't even know about in the future, the value of what those things are still going to be determined by how much cash they can generate.
Yeah.
And then that's just a function of what are their margins, right? So if the margins are higher, the odds are they've got some protection around the pricing power, which allows you to have those higher margins. The higher margins you have and the least amount of cost you have to support those margins really end up in your net profit. And, that's really not going to change. But technology is something that is more generally scalable than other business models. And so therefore, they tend to get higher multiples in the market, and their valuations tend to be, higher than other kind of normal industries.
So we've known each other for 14 months now. I think it was maybe a year, something around that. And you are an investor in Big Brand Ventures. You're a partner with us. You've been to like 8 shark retreats. We've been all over the country, mansions to tech, Canada, you name it. We got one coming up this week. We've done some filming together. We've done some cool activities, and we've partnered with many entrepreneurs. What is the most, and I didn't prep him for this, so I'm just curious, what's been the most exciting thing you see with Big Brand Ventures, what we're doing? What excites you the most for the future of the company?
Yeah. So I think the concept of Big Brand Ventures is amazing, where you're really just bringing a lot of entrepreneurs together to network and leverage other people's ideas and relationships such that, people can share, hey, this worked for me, this didn't work for me. And everybody has the ability to, take something away from that.
Yeah.
And so, I think, as BBV scales and is able to help more and more people, it's really going to be fun and interesting to see where you take it.
Yeah, we never know what we're going to see, right?
You never know what's going to walk in the front door.
Walk in the front door. All right. I'm going to have one more question. We're going to wrap up soon, but where can people find you online?
So
you can't find them online until now, but no, where's the websites?
Well, there's paid.com, there's shiptime.com. Also have a LinkedIn, a less than stellar LinkedIn presence, but we'll
change that this year.
And apparently Instagram and all the others.
We'll have an Austin Lewis, if it's available.com website soon, and all this stuff. All right, last question. First, I got to say, Austin's been a great mentor to me. He's changed my mind how I look at investing. We have so many portfolio companies that I always say are hungry kids looking to raise more money. And so from an investing standpoint, deploying capital to financial, this guy has really helped me, and I'm grateful to have you a partner in Big Brand Ventures as we take this, or my opinion to a $1 billion business. But I want to go to this. I ask everybody on the show, what's your best advice for an entrepreneur out there to have success in business or life?
Really, I think it's just about being realistic. I think the human brain wants to, take you you want to achieve as much as you possibly can. And I think you run the risk of kind of, overstretching what you're capable of doing.
Yeah.
And I think, in order to be successful, you kind of need to know what you're capable of doing and what you're not capable of doing. And that's why building the right, team around you with, not everybody's good at everything. And the faster you learn that about yourself, the better you're going to be as a person and you're going to be as a teammate and a team member. Right. And so knowing what you're not good at, I think is extremely important. And then, leveraging that so that you can fill in the right resources around you to kind of take your venture to the next level is really key.
That's solid advice. Check out Austin on all social media, coming soon, his websites. And until next time, y'all, we'll see you later.